Well, we're really pleased to have with us Jim Rogers, Chairman of Rogers Holdings, to take your questions in this Investors Clinic session. Jim, good to see you again. Let's kick off with this one. Question for Jim. Regarding precious metal prices, will the sheer volume traded on the paper market always dictate the market price to the downside, hence overriding the bullish physical bullion price? Can you talk a bit about paper versus underlying?
Well, the paper market has become huge, as you know, Jeff, in the past few years, not even the past 10 years, sooner than that. So it's becoming much more important, just as the paper wheat market is much more important than the physical wheat market. They play on each other, of course, but since one market is bigger than the other, it has a huge influence. Now, the paper market in gold and precious metals can go both ways, of course, because it's a lot easier for people to sell their gold now, and if people, for whatever reason, get disheartened, you're going to see a lot of redemptions in the paper market, and that's going to drive down the physical market.
So how do you then anticipate those movements, because the drivers are somewhat different from just saying, I believe the world is not a safe place to own paper assets, I want to own physical gold? There's obviously a different reason for people trading around paper, some of it to do with momentum. How ultimately then do you shape your investment process given those conflicting drivers?
And some of it having to do with sheer convenience. I mean, it's a lot easier. If I've got gold in the warehouse, it's not quite so easy for me to go down, get my gold, take it over, and have it sold. But if I own paper gold, I pick up the phone and I say, sell my paper gold, and it may take 8 seconds to do the whole transaction. I own some of both. Physical gold, many people have as an insurance policy in case, the paper markets close. Who knows what could happen? In case there's fraud in the paper markets, in case there's hyperinflation, in case there's war. There are many reasons to have physical gold hidden in your closet if you want to. The French peasants have been doing it for hundreds of years. The Swiss peasants for hundreds of years. I'm an old Swiss peasant. I'm an old French peasant. I have a little in my closet too. How do they work with each other? Well, as I say, it's a lot more speculation now in the paper gold market because it's so much easier to do than it was before. How do I know when to buy and sell, Jeff? Watch CNBC. You have the answer. CNBC can answer those questions every day, 10 times a day.
Well, we appreciate your confidence in CNBC, Jim, but it's you that I actually want to listen to, I suspect, here. Look, let's move on. Sebastian writes in from Geneva. He says, do you not think that imminent deleveraging within several sectors of the American economy could end up overriding any attempts by the Fed to grow the monetary mass in the medium term? Wouldn't this somehow imply that the US dollar is a good investment in the medium term? I guess he's asking us to sort of compare and contrast the outlook for gold vis-a-vis the US dollar, but given what he says about this, do you think that there is a prospect for a better performance in the greenback short term, and that maybe that represents a better opportunity than gold?
Well, I own the U.S. dollar in the meantime and in the short to medium term, and I suspect he's probably right. Gold is overdue for a correct. I own gold, and I'm not selling my gold, Jeff. Gold has been up 11 years in a row. That's extremely unusual for any asset. 11 years in a row without a single down year. So somewhere along the line, gold is going to have a correction. It's been correcting for 3 months now. It wouldn't surprise me if it went on for a while. It's normal. It would be good for the gold market. Anything that goes up 11 years in a row has to worry people. So at the moment, I would suspect the U.S. dollar is a better play than the gold market, but I own them both. If gold goes down, I'll buy more.
And Jim, just in terms of that dollar position, are you owning it with a view to movement in the dollar index, or are you pairs trading it with something else?
Well, no, I own the dollar. I own some other currencies as well. But no, a year or so ago, everybody was beating down the dollar. Everybody was extremely pessimistic on the dollar, including me. And when everybody is on the same side of the boat, Jeff, you know as well as I do, you go to the other side of the boat for a while. Now, normally I'm a terrible market timer. Normally I'm a terrible trader, but I'm trying to do something that I'm not very good at, and so far it's worked. I better be careful.
Given that you are based now in Asia, a good question from Stephen, who writes in and says, how do you see the US dollar then against the Asian currencies?
Well, it depends on the Asian currency. I own the renminbi. I would expect that the U.S. dollar will continue, at least at the moment, to go up some against the renminbi. The renminbi doesn't move very much, as you know, because it's a managed currency. For the most part, though, I expect the dollar to go up, except possibly against the yen. I own the yen. I would expect the yen to be even stronger than the U.S. dollar, but I own them both.
Back to gold for a moment. Brian writes in, he says, Jim, I hear what you're saying about owning some gold, but what is the price that you would feel comfortable buying more at today, given everything that's happening, Eurozone crisis, strain on the U.S. economy from its debt burden? Can you talk a little bit about entry and exit points for gold, Jim?
I said, Jeff, you should watch CNBC. Let's say gold started the year at 1,400, so if gold goes to 1,200, and it does have a down year sometime in the foreseeable future, I would have to get extremely excited about gold. If it goes to 1,400 or 1,500, I would start having to get more interested. I'll probably get more interested at 1,600. The deeper it goes, the more I would get excited. These are not predictions. He asked where I would get interested. Those are where I would get interested. At 1710 or whatever it is today, I'm not buying gold. I'm just watching, and likewise for silver.
And a good question from Graham that sort of follows up, but it's about Europe. He says, how is gold performing, do you think, Jim, in the current European crisis compared with other metals? Is there another precious metal that's giving you better protection against the volatility?
Well, if I had to buy one today, I would buy silver, just because silver, silver's nearly 40% below its all-time high. Gold is somewhat near it. Gold is 20% below its all-time high. So I would buy silver if I had to buy one today. I'm not buying any of the four precious metals today. I'm just watching. As I said, gold has been up 11 years in a row. That is extremely unusual from any asset class. And so I'm watching to see how this correction, which I think is going to go on for a while. I'm not a good market timer. If it goes on for a while, somewhere along the line, I'll buy more gold.
Okay.